Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Did you know by 2031, India is expected to add a total energy capacity of 4.6 lakhs megawatts? India is also likely to account for 25% of global energy demand over the next 2 decades. Join us on Friday, the 12th of Jan at 5 pm on Twitter Spaces, where we discuss how energy plays an important role in a country's growth and on India's quest for energy security.
Should you stop investing in this market? We all acknowledge that a very significant part of the Indian stock market is trading at very expensive valuation. We know that most of the companies which are now institutionally being owned are trading way above their long-term median valuation. It's a given. Let us not try to fool ourselves on that. Having said that, investors also have the need to continuously save and invest their money. Is this a market which you should completely sit out? Is it a market where you say, I'm not going to invest anything? Is it a market where you keep the money out of equity? At the outside, it looks like a difficult question to answer. But the moment you start defining what is your zone of comfort, then the answer begins to turn. To me, my zone of comfort should be the valuation I am comfortable paying for different categories of companies. What is the valuation I will pay for a large cap company? What is my growth expectation of that company? If the growth expectation is X, what is my valuation zone of comfort? Right? What is my comfortable valuation at which I would be willing to buy that stock? Once I define that, my decision changes from a market level decision to a team level decision to a stock level decision. I have comfortably moved from whether to invest in Indian equity or not to whether to invest in large cap or not, and then to at what valuation I am comfortable investing in a growth oriented large cap. An investor needs to move from that decision of whether to invest in equity to whether to invest in large cap or small cap or mid cap or banking or pharma or FMCG, whichever way you look at it, whether it is at category level or thematic level, you move both ways on the X and Y axis and then decide whether you can find companies at a valuation which you are comfortable. If you find companies within your zone of comfort, I see no reason why you should not buy them. If you don't find companies that are trading at valuations that you are comfortable with, then you should wait. So the decision to wait comes after you have explored this. It doesn't come seeing the Nifty or seeing CNBC or reading tweets or watching YouTube. It comes after some application of mind and after making the effort to identify opportunities and then coming to a place where you are either comfortable with some opportunities or you are not comfortable with any opportunity, or somewhere in between. Most opportunities are not comfortable, but you are comfortable with some opportunities. Where am I in this spectrum? I am comfortable with a few opportunities. And what do I expect going forward if the market is at the same place or fluctuating? I think individual opportunities will come into my zone of comfort progressively because there is a lot of churn happening. People are selling stocks to buy new stocks. When they do that, some of the stocks which I want to own may come into my valuation zone of comfort. They may drop 10%, then I may be interested in looking at them, at least to start a position. So this is not a market to sit out. That is how I view this market as an investor and as a portfolio manager. I don't wear different hats. For both, it's the same hat, and this is how I view this situation. If the market suddenly sees one sharp dip, then I believe that a number of companies will come into a very, very comfortable zone of valuation, and I would be more than willing to complete my entry position in them. Companies which I already bought earlier as an entry position, I may be willing to add some more if they come into a zone of valuation that is comfortable for me. So I would be waiting for that in those companies, and I would be acting on a few decisions where I am already finding comfort to buy. Our conviction in companies should not keep oscillating and fluctuating based on where the Nifty is. We should intensely focus on the company, not on Nifty. I see no merit in focusing on the market commentary of so-called experts, because in my experience, the experts are always going to be proved wrong because they give too many opinions, one every day in some cases. And the problem with giving frequent opinions is that many of these opinions will go wrong and only a few will go right. So the expert will later come and tell you that, see, I told this correctly. So all the wrong opinions will be forgotten, only the right opinion will be again replayed to you. So going behind all these opinions doesn't help me as a professional or as a individual investor. So I would rather focus on starting with a market level analysis, going to a thematic or a sectoral level analysis, and then measuring company valuations to seek opportunities where I am comfortable with the valuation. So the constant search is for spots of valuation which I am comfortable with. I think this is a market to do that, and I hope you liked what I said for this market context. But the little secret is this applies to every market context. Thank you for watching this video.